In thinking about risk, it's important, first of all, to know what risk is. So let's define risk. Risk is the potential for loss. Risk is the potential for loss. In dealing with risk, there's 5 different types of ways to deal with risk, and we need to understand them as well. First, there's risk avoidance. If risk is the potential for loss, then risk avoidance is the total refusal to engage in behavior that leads to risk. Risk avoidance, refusal to engage in behavior that leads to risk and therefore loss. Along with avoidance, there is risk retention. In risk retention, you retain or voluntarily, or perhaps in some situations involuntarily, submit to the risk, and you would likely do this only in situations where their potential loss is rather small. You don't want to retain risk if the loss potential is large, but where the loss potential is small, you might agree to retain, either willingly or unwillingly, the risk involved. Next, there is risk sharing. In this scenario, either a group of individuals or a group of companies, more than one, comes together and they agree voluntarily to share the risk equally. So if there is loss, they would spread the losses equally. They're all sharing in the risk together. This group states that the losses suffered by one will be borne by all. Next, you have risk reduction. In risk reduction, you take active steps to minimize the damage caused by risks that have a high frequency and yet low loss. Taking steps to minimize the risk with risks that have a high frequency and yet a low loss associated with them. So risk reduction, taking active steps to minimize the risk. And then finally, there is risk transfer. And in risk transfer, basically, there is a shifting of the risk from one individual to another who is more equipped to handle the loss should the risk result in a loss. So we need to understand risk first as the potential for loss. And then within that we have avoidance, the refusal to engage in risk. Retention is to submit, voluntarily or involuntary, to the behavior only in situations where the loss would be small. Sharing, we have a group that agrees that the loss of one would be shared evenly among all. In reduction, you take steps necessary to reduce risk. And then finally, in transfer, it goes from one to another, more able to bear the loss should the risky behavior result in loss.